Good afternoon, everyone. Today's Wednesday, August 17th. I'm Matt Krajna, Co-Chief Investment Officer at Nottingham Advisors. For today's Market Minute, wanted to provide a quick update on earnings season so far, which by and large has beaten expectations and been largely positive. I think coming into earnings season, market expectations were that earnings were going to see significant downward revisions, and there was a lot of downside risk to 2022 and 2023 earnings, which by and large has come to pass. I think earnings from the largest S&P 500 companies has been quite good. Even this week, trying to get a little bit more insight towards the health of the U.S. consumer. Retail earnings this week were mixed, but at the margin, I think positive relative to expectations. So looking ahead at 2023, S&P 500 earnings have come down a little bit, to the tune of maybe 3.5 or 4%, but not as much as once feared. And so I think we've seen the market rally as earnings have come in better than expectations and really start to reprice some of the recession risk that was front and center, just a couple of weeks and couple of months ago. And so looking ahead towards the Fed's meeting coming up at Jackson Hole, all eyes are going to be on Fed Chair Jerome Powell and what he has to say about the pace of future rate hikes and where he thinks the trend on inflation is heading. We've seen a couple hundred basis points this year of Fed tightening already. Typically monetary policy acts with a lag, takes a little bit of time to bleed into the economy and ultimately see what the effects of those rate hikes are. We've started to see some effect on the housing market. Demand for mortgages is down, housing prices are down, and just the overall pace of kind of go that the housing market had seen over the past couple of years has largely slowed to a crawl. So some of that is taking a little bit more front and center approach. Other impacts on higher rates, will take a little bit longer to see the true impact of that. But ultimately, we've got a consumer that's been pretty resilient, earnings that have been better than expectations, and an unemployment rate that continues to move lower. So we're at 3.5% unemployment, which there's never really been a recession post-World War II with unemployment below 4%. So taking it at the whole here, data has been better than expectations over the past month, and we're going to be looking to the Fed chair to see if he can give us any clues into what the Fed's thinking, both in terms of the health of the economy, the health of the labor market, and ultimately the path of inflation moving forward. So thanks for tuning in today, and be sure to stay tuned for future updates.